Have you ever heard the saying, prepare for the worst, hope for the best? Well, it seems that financial expert and best-selling author Robert Kiyosaki is urging investors to do just that. In a recent prediction that has sent shockwaves through the financial world, Kiyosaki has warned of potential mayhem in the upcoming week. With his track record for accurate predictions, investors are taking note and wondering what they can do to protect their investments. Hello guys, and welcome back to the channel. In this video, we'll dive into Kiyosaki's prediction, explore the potential causes for the disruption, and provide actionable tips for viewers to prepare for the potential fallout. So buckle up and get ready to navigate the storm with us. Robert Kiyosaki, a well-known financial expert, has lately garnered a lot of attention for his forecast that there would be soon mayhem in the banking sector. Kiyosaki has suggested that he thinks there might be considerable market disruption and financial instability in the near future. Despite the fact that he has not offered a lot of precise specifics regarding his forecast, he has indicated that he believes this could happen. Kiyosaki has referred to a number of different elements as possible reasons for this disturbance. These factors are listed below. The continuing COVID-19 epidemic and the associated economic issues that have emerged from it are two of the most important reasons that have contributed to this situation. Because of lockdowns and other limitations, global supply chains have been interrupted, which has resulted in widespread unemployment. This, in turn, has the potential to lead to substantial financial instability. As another important cause for worry, Kiyosaki has called attention to the ever-increasing quantity of debt. Since governments and corporations have taken out significant loans in order to finance relief operations connected to the epidemic, the amount of global debt has reached proportions that have never been seen before. This might potentially pave the way for a situation in which creditors begin making demands for repayment, which would surely lead to widespread financial instability. Another element that Kiyosaki has brought to people's notice as being a potential cause of market disruption is the risk of inflation. Some industry experts believe that we may be on the verge of entering a time when inflationary conditions will prevail because governments all over the world are producing money at record rates in order to maintain their own economies. As a result of this, they believe that we may be on the verge of entering a time when conditions will be inflationary. This might lead to a loss of trust in traditional currencies, which in turn would further exacerbate the already present instability in the financial system. It is important to keep in mind that while Kiyosaki's forecast may seem to be gloomy, the author has a history of making accurate forecasts. For instance, he correctly anticipated the global financial crisis of 2008 many years before it really happened. As a result, many investors see him as a credible source. In addition to this, he has been an outspoken critic of the stock market, and he has urged investors to show caution in the face of markets that may be overvalued. Although there is still a great degree of uncertainty around Kiyosaki's prediction of financial mayhem in the next week, it is clear that there are a large number of potential reasons that might lead to market disruption. These causes would include a number of factors, including it is in the best interest of investors to take note of these fears and be prepared for the prospect of volatility in the not-too-distant future. This would be in the best interest of investors. Robert Kiyosaki's warning of imminent financial mayhem has many investors wondering what might create such a disturbance in the markets. Kiyosaki made his prediction in an interview with Business Insider. Although Kiyosaki has not offered too many details regarding his prognosis, there are a lot of possible causes for market disruption that are worth investigating. One possible contributing cause is the continuing COVID-19 epidemic and the associated economic difficulties that have arisen as a direct consequence of it. There is a possibility that this might result in a considerable degree of financial instability, since lockdowns and other restrictions are causing disruptions in global supply chains and leading to a broad increase in unemployment. The ever-increasing quantity of debt is another issue that has the potential to contribute to market instability. As a result of governments and corporations taking out large loans in order to fund relief activities connected to the epidemic, the overall amount of global debt has reached proportions that have never been seen before. This might set the stage for a scenario in which creditors start making demands for repayment, which would inevitably result in widespread financial instability. Inflation is another possible source of market disruption that Kiyosaki has brought to the forefront of the conversation. There is a possibility that we are on the cusp of a time of inflation due to the fact that governments all over the globe are printing money at rates that have never been seen before in order to boost their own economies. This might result in a lack of faith in conventional currencies, which would further aggravate the pre-existing volatility in the financial system. There may be more current economic and political factors that contribute to the disruption of the market. For instance, continued trade disputes between the United States and China, increased geopolitical tensions, and changes in interest rates might all possibly contribute to a potentially turbulent market. It is important to note that a disturbance in the market may have a broad variety of repercussions. Thus, it is important to consider how this may affect viewers. Anything from the cost of products and services to retirement savings and investments might be impacted, depending on how severe the interruption was and how long it lasted. Those viewers who have money invested in the market may want to think about taking precautions to safeguard their holdings, such as expanding the number of assets in their portfolios or investigating other possible investing approaches. There are a variety of actions that viewers may take to safeguard their money and be ready for the possibility of market instability. If they are worried about the possibility of a financial disruption in the markets, they should be aware of those actions. One piece of advice that may be put into action is to diversify their holdings. This may be helpful in protecting against losses in any one asset or industry in particular. In order to lower their overall exposure to risk, investors may wish to consider diversifying their holdings across a variety of asset types, including stocks, bonds, and real estate, among others. Consider alternate investments that have a lower probability of being adversely affected by the volatile market as a further method of mitigating risk. For instance, some investors may wish to explore investing in gold or other precious metals, since these types of investments have a tendency to maintain their value rather well when the economy is unstable. In addition, it is essential for investors to maintain a high level of awareness about market developments and economic happenings that may have an effect on their assets. To keep up with the most recent changes in the market, they need to either talk with a financial counselor or do their own study. Both of these options are available to them. It is also important to keep in mind that disruptions in the market might sometimes provide chances for investors. For instance, if the market sees a major decline, some investors may view this as a chance to purchase stocks or other assets at a reduced price. This might be the case if they anticipate that the market would eventually recover. Yet, it is essential for viewers to exercise caution and refrain from taking any unwarranted risk in the face of the possibility of a disruption in the market. They should also bear in mind that there are no guarantees when it comes to investing, and it is essential for them to be prepared for the likelihood that they may incur losses. Last but not least, it is essential to keep in mind the significance of always being well prepared for general economic downturns. This may involve putting money away in a savings account or unexpected expenses, reducing the amount of debt one owes, and living within one's means. Viewers may assist in protecting themselves and other assets against the possibility of economic volatility by carrying out the procedures outlined below. Robert Kiyosaki's prediction of impending financial mayhem has generated a great deal of interest and concern among investors. While the specifics of his predictions are unclear, there are a number of potential factors that could contribute to market disruption, including the ongoing COVID-19 pandemic, rising debt levels, and inflation. To prepare for potential market instability, viewers can take actionable steps such as diversifying their portfolios, considering alternative investments, staying informed, and being cautious about taking unnecessary risks. It's also important to be prepared for economic downturns in general by building up an emergency fund and living within one's means. While market disruption can certainly be a cause for concern, it's also worth keeping in mind that it can sometimes create opportunities for investors who are prepared and informed. By taking steps to protect their investments and staying informed about market developments, viewers can be better positioned to weather potential financial storms and emerge stronger on the other side. If you found this video informative and helpful, be sure to subscribe to our channel for more insightful content on investing and finance. By subscribing, you'll be the first to know about our latest videos and be better equipped to make informed investment decisions. Additionally, if you have any questions or comments about this topic, feel free to leave them in the comments section below. We value your feedback and would love to hear from you. Thank you for watching, and we hope to see you in our next video.